Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 23rd, 2025, and we're diving into MillerKnoll's first quarter fiscal 2026 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. MillerKnoll, a key player in the industrial and consumer sectors, has just released their Q1 fiscal 2026 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. MillerKnoll reported net sales of $955.7 million, a 10.9% increase year over year. John, what are the key drivers behind this growth?
The growth in net sales is impressive, driven by strong performance across their segments, particularly in North America Contract and International Contract. However, it's worth noting that the gross margin decreased slightly by 50 basis points due to tariff-related impacts, despite the leverage from higher sales.
And what about profitability?
On the profitability front, MillerKnoll's adjusted earnings per share came in at 45, a 25% increase from last year, beating the analyst forecast of 35 cents. The operating margin also saw a significant improvement, rising to 5.6% from 1.8% in the previous year, showcasing effective cost management and operational efficiencies.
Segment performance. John, can you break down the performance by segment for us?
Absolutely. The North America Contract segment saw a 12.1% increase in net sales, driven by pricing actions and strong demand. The International Contract segment also performed well, with a 14.4% increase in sales. Meanwhile, the Global Retail segment grew by 6.4%, supported by new store openings and a solid performance in North America.
Were there any challenges noted in these segments?
Yes, while sales were strong, the Global Retail segment faced margin pressures due to increased freight costs and tariff impacts. Additionally, the North America Contract segment experienced a decline in orders, attributed to order pull forward from the previous quarter.
Cash flow and debt management. Let's talk about cash flow and debt. How is MillerKnoll managing its financial position?
MillerKnoll reported liquidity of $480.5 million, which includes cash on hand and credit facility availability. They issued a $550 million Term Loan B, extending its maturity to 2032, which is a strategic move to manage debt. Cash flow from operations was $9.4 million, and their net debt to EBITDA ratio stands at 2.92x, indicating a stable financial position.
What does this mean for their financial health moving forward?
These actions reflect a strong balance sheet and prudent financial management, positioning MillerKnoll well to navigate future challenges and capitalize on growth opportunities.
Future outlook and strategic initiatives. Looking ahead, what is MillerKnoll's outlook for the next quarter?
For Q2, MillerKnoll expects net sales between $926 million and $966 million, with adjusted EPS ranging from 38 to 44. They are also planning to open 4 new retail stores, which should support their growth strategy. Additionally, recent leadership changes are expected to drive strategic initiatives forward.
How do these initiatives align with their long-term goals?
These initiatives are in line with their focus on expanding market presence and enhancing operational efficiencies. The leadership changes are aimed at fostering innovation and driving sustainable growth, which are crucial for their long-term success.